In the coming hours, countless bank accounts throughout the United States will see deposits that may amount to $2,400. For those relying on Social Security, unawareness regarding this particular payment batch could lead to financial loss. The Social Security Administration has confirmed a new wave of deposits reaching accounts. However, a critical detail often overlooked is that not everyone receives payment on the same day. Comprehending your specific payment schedule can distinguish between effective financial planning and potential financial disorder. Currently, the Social Security Administration operates on a strict calendar system, determined by your date of birth and when you began claiming benefits. If your birthday falls between the 1st and the 10th of any month, your funds arrive on the second Wednesday of that month. For those born between the 11th and the 20th, payment comes on the third Wednesday. Individuals with birthdays between the 21st and the 31st receive their payments on the fourth Wednesday each month. Yet this is where attention becomes crucial. Supplemental payments, cost of living adjustments, and even one-time deposits can significantly alter these amounts. The essential question is not merely when your money arrives, but whether you are receiving all that you are entitled to. It is vital to break down exactly what is coming, who qualifies, and how to verify that you are not leaving a single dollar unclaimed. Many people do not realize until too late that the Social Security Administration processes over 70 million payments every month. Each of these payments follows a system meticulously designed over decades. However, a concern that troubles financial advisors is that thousands of seniors miss out on money they have earned simply because they do not understand how this system functions. When discussing a $2,400 deposit hitting your account, this is not solely your regular monthly benefit. It encompasses a combination of factors, including your primary insurance amount, any applied cost of living adjustments, potential back payments from processing delays, and supplemental payments, for which you might qualify based on your specific circumstances. Examining the actual mechanics of the upcoming payment batch reveals interesting details. The Social Security Administration does not disperse payments randomly. They adhere to a staggered payment schedule. This schedule has been in place since 1987. When Congress determined that sending all Social Security payments on the third of every month created massive logistical problems for banks and financial institutions nationwide. Consequently, they divided payments based on birth dates. This is crucial information. Every beneficiary should record in a safe place. If you began receiving benefits before May 1997, you are part of the legacy group, and your payments arrive on the third day of each month, regardless of your birth date. However, if you started receiving benefits after that cutoff date, your payment day depends entirely on which part of the month you were born. This is where confusion often arises, and understandably so, because the Social Security Administration does not make this information easily accessible. Your birth certificate date dictates your payment Wednesday. The second Wednesday of the month is for those born between the 1st and the 10th. The third Wednesday is for birthdays between the 11th and the 20th. The fourth Wednesday is reserved for individuals born between the 21st and the 31st. But the upcoming batch is special, and there is a specific reason why. Additional payments are included that do not follow the normal schedule. If you are not paying attention, you might overlook important information about money that is rightfully yours. The $2,400 figure is not arbitrary. The average Social Security retirement benefit in 2025 is approximately $1,876 per month for individual retirees. What makes this payment batch distinct is the combination of regular, monthly benefits, plus potential supplementary payments that some seniors qualify for, but many do not know exist. To make this clear for your financial situation, consider that if you receive the maximum Social Security benefit because you worked for 35 years, at or above the maximum taxable earnings limit, and you delayed claiming until age 70, your monthly payment could be as high as $4,973. That is the absolute ceiling. However, most people do not receive that amount, which is normal since most did not earn the maximum taxable income. For 3.5 decades consecutively, what is observed with the upcoming deposit is more nuanced. The Social Security Administration periodically issues supplemental payments from several sources. First, there is the annual cost of living adjustment, which for 2025 is 2.5%. This means that if you received $18 per month in 2024, Your payment automatically increased to approximately $1,845 starting in January 2025, but here is where complexities emerge. Sometimes the Social Security Administration errors in calculating these adjustments. When they catch these errors, they issue back payments to compensate for the difference. These back payments can add several hundred to your regular monthly deposit and typically come with little warning, except for a notice in the mail that arrives just before or after the money hits your account. Another source of additional funds in the upcoming batch could be related to supplemental security income, commonly known as SSI. SSI differs from regular Social Security retirement benefits, but many seniors receive both programs simultaneously. SSI is needs-based, designed to assist people with limited income and resources, and the monthly federal payment for 2025 is around $943. For an individual, if you qualify for both Social Security retirement and SSI, these payments are calculated separately and sometimes arrive in the same deposit, making your total monthly income appear significantly higher than your base. Social Security benefit alone, key to understand, is that SSI payments follow a different schedule than regular Social Security. They typically arrive on the first of the month. But when payment dates fall on weekends or holidays, schedules shift, and multiple payments can end up in your account on the same day. Now consider something rarely discussed but absolutely essential: the taxation of Social Security benefits. This is critical because, depending on your total income, you might have to pay federal income tax on up to 85% of your Social Security benefits. Do not panic. This does not mean the government takes 85% of your check. It means that up to 85% of your benefit amount could be considered taxable income. When you file your tax return, here is how it works. The IRS examines what they term your combined income, which is your adjusted gross income plus any non-taxable interest, plus half of your Social Security benefits if you file as an individual, and your combined income is between $25,000 and $34,000. You may have to pay income tax on up to 50% of your benefits. If your combined income exceeds $34,000, up to 85% of your benefits may be taxable. For married couples filing jointly, these thresholds are $32,000 and $44,000, respectively. Now discuss two rules that affect thousands of beneficiaries, but are rarely explained properly: the windfall elimination provision and the government pension offset. These rules can significantly reduce your Social Security benefits. If you also receive a pension from work where you did not pay Social Security taxes, common for certain government employees, teachers in some states, and people who worked for employers who opted out of Social Security, the windfall elimination provision can reduce your Social Security benefit by up to half of your pension amount, though there is maximum reduction limit adjusted annually. The government pension offset primarily affects spousal and survivor benefits, reducing those benefits by 2/3 of your government pension amount. These provisions are incredibly complex, and many people discover they are affected only when they apply for benefits and see a much smaller payment than expected. Based on the Social Security Administration's online calculators, another essential aspect to understand about the upcoming payment is the difference between your primary insurance amount and your actual benefit amount. Your primary insurance amount is the benefit you would receive if you claim Social Security at your full retirement age, which is 67 for anyone born in 1960 or later, but your actual benefit amount depends on when you choose to start claiming. You can claim as early as 62, but if you do, your benefit reduces by approximately 30% compared to waiting until your full retirement age. Conversely, if you delay claiming past your full retirement age, you earn delayed retirement credits that increase your benefit by 8% for each year you wait, up until age 70. So someone born in 1960 with a primary insurance amount of $2,000 would only get about $14 if they claimed at 62, but would receive $2,480 if they waited until 70. This is why some people receiving the upcoming payment see amounts that seem surprisingly high. They are collecting those delayed retirement credits earned by waiting. Financial experts know that Social Security benefits can continue to increase even after you start receiving them, not just from cost of living adjustments. If you work while receiving Social Security benefits, before reaching your full retirement age, an earnings test can temporarily reduce your benefits. If you earn more than a certain threshold, for 2025, that threshold is $23,400, For people who will not reach full retirement age during the year if you earn more than that, the Social Security Administration withholds $1 in benefits for every $2 you earn above the limit. But here is positive news often omitted. Those withheld benefits are not lost permanently. Once you reach your full retirement age, the Social Security Administration recalculates your benefit to account for the months when benefits were withheld, effectively giving you credit for those payments in the form of a permanently higher monthly benefit going forward. Another factor that can boost your payment is if the Social Security Administration discovers that your earnings record was incomplete or incorrect. This happens more often than realized, especially for people with multiple jobs, those who worked for small businesses with payroll issues, or individuals with name changes causing administrative confusion. The Social Security Administration should automatically update your earnings record each year based on employer reports, but mistakes occur. If you checked your Social Security statement and noticed incorrect earnings for a particular year, and you contacted the Social Security Administration to correct it, you might see an adjustment payment when they recalculate your benefits based on corrected earnings. These adjustment payments can be substantial, especially if the error affected multiple years or occurred during your highest earning years, which matter most for benefit calculation. Consider survivor benefits, another area where people can see unexpectedly large payments. If you are a widow or widower receiving survivor benefits based on your deceased spouse's earnings record, you might be entitled to more money than you currently receive, especially if your spouse delayed claiming their own benefits or had high lifetime earnings. Survivor benefits are calculated based on what your spouse was receiving or would have been entitled to receive, and they can be as high as 100% of that amount. Depending on your age when you start claiming them, if you claim survivor benefits early and are now at or past your full retirement age, you might check whether switching to your own retirement benefit would give you more money or vice versa. The rules are complicated, but the Social Security Administration allows switching between different types of benefits. If advantageous, an option many people do not realize exists. Medicare premiums directly affect your Social Security payment and might explain why your net deposit amount changes annually. If enrolled in Medicare Part B and Part D, those premiums are typically deducted directly from your Social Security payment before it reaches your bank account. The standard Part B premium for 2025 is $185 per month for most people. However, if your income exceeds certain thresholds, you will pay an income-related monthly adjustment amount that can push your premium much higher. These thresholds are based on your modified adjusted gross income from 2 years prior. So your 2025 premiums are based on your 2023 tax return. If you had a one-time income spike 2 years ago, such as selling a property or taking a large retirement account distribution, you could pay higher Medicare premiums this year, even if your current income is lower. The good news is that you can appeal these premium adjustments if you experience certain life-changing events, like retirement loss of a spouse or loss of income-producing property. Now address confusion that arises every year. The timing of cost of living adjustments, and when they appear in your bank account. The cost of living adjustment is announced in October each year, typically around the second week, and takes effect for benefits payable in January of the following year. But timing can be perplexing. December's Social Security payment is actually January's benefit, paid early due to the holiday schedule. So when news reports a cost of living adjustment increase taking effect in January, you might see that increase in your December payment, depending on your payment schedule. This is why some notice their payment amount changed. In what seems the wrong month, it is not a mistake, but the Social Security Administration's way of handling the calendar. Around holidays, discuss direct deposit versus paper checks, which still matters more than people realize. If you still receive Social Security payments by paper check in the mail, you are in a shrinking minority, and more importantly, at risk. The federal government has required direct deposit for all benefit payments since March 2013, with few exceptions. For people without access to a bank account or facing hardships, paper checks can get lost, stolen, delayed, or damaged. They also take longer to access, since you must wait for mail delivery and then deposit or cash the check. If you receive paper checks and the upcoming payment includes yours, understand that it will take several additional days to reach you. Compared to direct deposit recipients, the Social Security Administration strongly encourages everyone to sign up for direct deposit. If you lack a traditional bank account, you can use the Direct Express debit card program designed for federal benefit recipients. Another important aspect is appealing Social Security decisions, which every beneficiary should know, but most do not. If you believe your benefit amount is wrong, or the Social Security Administration made a decision you disagree with, you have the right to appeal. You have 60 days from receiving a decision to file an appeal. There are 4 appeal levels. Reconsideration, where someone not involved in the original decision reviews your case. A hearing before an administrative law judge. Review by the Appeals Council, and potentially federal court review. Do not simply accept what the Social Security Administration tells you. If you genuinely believe an error occurred, many have successfully appealed benefit calculations and received years of back payments. Key is documenting everything, keeping copies of all correspondence and not missing appeal deadlines. As once passed, challenging a decision becomes harder. Consider representative payees, which affect many seniors needing help managing benefits. If the Social Security Administration determines a beneficiary cannot manage their own payments due to physical or mental limitations, they appoint a representative payee to receive and manage benefits on the beneficiary's behalf. This is often a family member, but can be a professional organization. Representative payees have legal obligations to use benefits for the beneficiary's current needs, save any excess for future needs, and report spending to the Social Security Administration. If you act as a representative payee for a parent or family member, keep careful records, because the Social Security Administration conducts periodic reviews and may ask for detailed accounting of benefit spending. Conversely, if you suspect a representative payee misusing benefits, report it to the Social Security Administration immediately. As that is serious fraud, the upcoming payment batch represents more than money. Hitting bank accounts across America, it represents the fulfillment of a social contract in place since 1935. When President Franklin Roosevelt signed the Social Security Act into law, you paid into this system throughout your working years, with every paycheck contributing through FICA taxes, and now you receive the benefits you earned. Understanding exactly how much you should get, why that amount might vary monthly, and what factors can increase or decrease your payment, is not just about being informed. It is about ensuring you receive every dollar you are entitled to after decades of hard work and contribution to this system.